Hello and welcome to the Chilled Investor. This is not financial advice. Always do your own research. In this video, I will discuss the different assets listed in a company's financials and explain what they mean. So we have two main categories of assets, current and non-current. Current assets are assets that can easily be turned into cash, things such as stock or even cash in the bank, and normally turned around within 12 months. The non-current assets are those which are not easily turned into cash, things like warehouses that hold stock or machines used to conduct business. So we'll start with the non-current assets. In this category, we normally have property, plant and equipment and intangible. So first one would be the property, plant and equipment. Now this is pretty self-explanatory, but basically it's non-current as it's needed to conduct business. Things like for a building industry, you'd need your diggers, or for like a warehouse, you'd need large buildings, that sort of thing. So next we have intangible assets. So an intangible asset is one that is not a physical thing. It's not something that can be touched. Some examples of intangible assets are things like trademarks, copyrights, and patents. Now on to current assets. These are normally made up of inventories, trade and other receivables, and cash at the bank and in hand. So we'll start with inventories. This refers to what the company holds in stock. Now this could be raw materials for making goods. For example, a bakery having flour, sugar and butter ready to use. Or it could be finished goods ready to sell, such as the bakery's cake, flapjack or loaves of bread. Next, we'll look at trade and other receivables. So this is basically the assets and services that have been sold and are awaiting payment. For example, if a garage services a fleet of cars, they may do a monthly invoice and then wait 28 days for payment after the invoice is received. Or another example could be if small retailers buy from a warehouse and are given credit. Until that credit is paid, it would be trade and receivables. Finally, we have the cash in hand or at bank. Now this is also quite self-explanatory. This is literally the cash that the business holds, or which is held at the bank and are easily accessible. If you liked the video or you found it useful, please think about leaving us a like or subscribing. It'll really help the channel and I do appreciate it. Thanks for watching and I'll catch you on the next one.